This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. It's a flip of the coin. It's a freaking flip of the coin. Once that coin flips, though, what you do next on the next flip is what counts. And the next flip is what counts. Each iterative step of the way, you make a choice. No crying over spilled milk. If the first flip doesn't go your way, who cares? There's gonna be another flip. As you think about the coin flip, let me pull in a tweet from one of my most popular guests, Larry Tintorelli. He's appeared on the show multiple times. Larry did not start in the trading space, but it looks like he's moving that way fast. A very popular Twitter handle, to say the least. But this tweet caught my eye, and it inspired me with the coin flip. Larry very simply posted a picture of a quarter. And he said, someone asked me for my best predictive indicator. Here it is. More accurate than most calls. No ego, bias, or emotional need to be right. Just a coin flip. That's all it is. Damn, people can't handle that. They cannot handle that. People want certainty. Tell me that the dollar will end on this day. Tell me that crude oil will go to here. Tell me what price level Facebook is heading to. Don't you realize that if you're asking those questions, well, you probably don't realize if you're asking those questions, or you're self-delusional, or you're selling something. But if you're trying to figure out what price level Facebook is going to go to, stop. You're on the wrong path. You're going the wrong direction. You haven't found the right voices yet. You haven't found the right direction yet. You're guessing. You're pissing in the wind. Absolutely 100% peeing in the wind, splashing right back on your face. You do not want to be asking yourself, what price level is Facebook going to next? Bad question. Wrong question. While I'm using Larry's Twitter handle, let me go in for one more tweet that I really liked, especially since he was promoting a picture of my book, Trend Following. But you'll see where I'm going. Larry tweets, for my money, the absolute best book on the subject, the first book that taught me price and no prediction works. Well, I appreciate Larry giving me a little free pub. I'll take it any day of the week. But his point is independent of me. Look, Larry's point is universal. It's timeless. Price and no prediction. The physical price is all you're trading. You can't know all the fundamentals. It's impossible to know all the fundamentals. If you can't know all the fundamentals, then why the mental masturbation? Why not go straight to the truth, the only truth that you know, which is the traded price every day? No prediction. So again, let me read Larry's initial tweet. For my money, the absolute best book on the subject. He links to a picture of my book. The first book that taught me price and no prediction works. If you check out Larry's Twitter handle, you will see that if you're that blunt and that opinionated, even if it's backed up by data and traders that came literally decades before Larry and I were ever on the scene, it doesn't make a difference, because there's a lot of fragile egos out there that either can't let go of what they've got, some kind of major confirmation bias or major cognitive dissonance. You just don't know. But people love to fight when you're blunt and you're telling the truth. So Larry puts that tweet out and somebody immediately responds, price is going up, so is likely to go up more. Sounds like a prediction to me. I responded, A prediction that might only last one more day is not much of a prediction. I realized he really didn't know where he was going, so I wanted to bring him in gently. Look, this is Twitter after all. You can't exactly make detailed, long cases unless you're tweeting all day long. And some people do that very effectively, like Larry. I'm not as effective on Twitter. I just don't know if I've got the patience. I like this little podcast medium. The critic to Larry's original tweet, the one that said it sounds like a prediction to me, responded to my tweet. What's time got to do with it? It's still a prediction. I responded, I don't think there is still a debate about the existence of momentum. That's been settled. And it has been settled. You're not making a prediction. Imagine right now we are in the future and we're looking back. There's going to be trends everywhere. You didn't have to predict those trends to trade them. It's human nature. Put aside technical analysis, put aside trend following, put aside charts. This is human nature. Human nature trends. Human nature herds. It goes in wild-ass directions. Lemmings jumping off a cliff. Lemmings going straight up. Lemmings going straight back down. It's a wild wave up and down. We know this. History is not about to change. For example, when I say history is not about to change, let me take you back in time a little bit. Niccolo Machiavelli. Whoever wishes to foresee the future must consult the past, for human events ever resemble those of preceding times. This arises from the fact that they are produced by men who have been and ever will be animated by the same passions. The result is that the same problems always exist in every era. Every era. Momentum exists. It's not going away. You're not predicting a damn thing. You just know that we're animals. We're dogs. We're batshit crazy. And we're going to create trends up and down. Sometimes they're smart trends. Sometimes they're dumb trends. Who gives a shit? They're trends. That's the whole point. And you just got to have a strategy that gets you on and gets you off, and you control your risk along the way by not betting too much. I mean, even if you've got a great trend following strategy and you're levered to the hilt, you're going to blow up. Even if you've got a good strategy, because your risk management strategy was death. Let me take this narrative to a very serious money management conference. The Michael Milken event. And this was a Milken panel on investment management. On the stage, Kent Clark, managing director at Goldman Sachs, Jeffrey Gundlach, CEO of Double Line Capital, David Harding, Winton Capital, a trend following trader, someone from the Oregon State Treasury, government suit, and somebody from Blue Mountain Capital, not familiar with. That's who's on stage. Now let me play a clip. This involves three people. First, it's Jeffrey Gundlach. Then the host might say something, and then David Harding gets involved. It's right in the exact same headspace with where I just went on Larry's tweets.
Well, we're talking a lot about kind of institutional ideas, of institutional asset flows, but one of the causes of great asset concentration also is the fund industry and the ETF industry, where there's a lot of demographic, call it retail money, retirement money, that is involved necessarily in the financial markets. And I think one of the things that will cause further concentration will be the emergence of these so-called robo-advisors, which, I mean, the financial planner industry has a very wide range of quality in terms of the deliverable. I mean, a lot of financial planners are true asset gatherers and do nothing except basically use a template, and others are extremely creative. But the ones that are simply asset gatherers they charge a lot of money. I mean, their fees are rather high for RAs. And robo-advisors' primary offering, I think, is the costs are low. Describe a robo-advisor. Well, it's basically just a template, really. You come up with a so-called risk profile, which everybody says that they want growth with safety. So everyone has the same risk profile. And what's your age and what's your goal and this sort of thing. And I think ultimately what robo-advisor does is it's a one-size-fits-all kind of solution. You put it in, if you put the same inputs in for two people, you're likely going to get the same output. But it goes to the draw is the lack of overall success by human advisors at 3 or 4 times the cost of what one can get through an algorithm, or to be pejorative, a spreadsheet advisor. I think one of the risks of that becomes that when one-size-fits-all solutions start to be kind of automatically injected into the system, it means that everybody's invested the same way. And everybody will start to move, and I think you start to get systemic risk as that concentration of assets proliferates.
The term robo-advisor suggests to me, I've been hearing it a lot out here and a bit in the UK, it suggests some sort of algorithmically driven investment strategy.
It sounds very fancy.
Andrew Lowe said the other day that in the future...
I'm sure it's just 60-40.
Andrew Lowe said, the top behavioural economist, said that in the future, in 2039, most people will have algorithmically driven financial advisors. And I thought to myself that, it's impressive to be 50 years out of date. The fact that Andrew Lowe is 50 years behind when we started AHL. 50 years we started robo-advisors, 30 years ago. And very, 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 very successful. But inventing it now seems like a rather remarkable, terminological... in a sense, the systemic trading industry of robo-advisors, aren't they? That's it. So I don't know how come they're inventing it in 2015.
The point you're trying to make is that robo-advisors are...
existed for 40 years.
For 40 years, they're here.
And been very successful, generally.
You've been a robo-advisor for a long time, is what you're
saying.
Yes,
certainly.
Well, you're a robo-manager or a robo-investment person. I think it's different than allocating assets, stocks, bonds, real estate, and so on.
I wish I had a high-res video of this presentation, because Harding, sitting on that stage with very accomplished names, and these very accomplished names, just as we saw in the Twitter conversation that I was having with XYZ, whoever the hell that guy was, he didn't know what he was talking about. But here you have the brightest, most successful fund managers on the stage, and they're talking about robo-advising as if it's some new thing. Now, Harding, with very distinct British humor, trying to be somewhat nice about it, is pointing out to these guys, this stuff is not new. You can rename it Robo for systematic, Algo for systematic. But to have a non-predictive strategy like trend following, you can automate it. And it's been automated for decades. Not something new. That was Harding's point. And these guys on stage, they're just like, they got no clue. And these are the best and the brightest. And that is what is so exciting when people have the aha moment of an alternate strategy than what the rest of the world is practicing. Most of the world, if they have their money in the markets, are trusting guys that are talking about 60-40 splits, the fundamentals of this, the direction of that. Harding is not saying any of that. Harding's saying, I'm a trend following trader. I'm systematic. It's not new. It's worked for a very long time. What planet are you guys on that you don't know about it? Because you're the best and the brightest. Now, I tend to think they all know about it. But everybody has a book to defend. Everybody has a dime to make. And what's amazing to me, after putting up my first website on trend following in 1996, still to this day, the vast majority of the mainstream Wall Street players look at trend following practitioners, and start to almost just sound stupid. They seemingly don't know which end is up. And it just becomes a never-ending, for that particular month, year, or decade, whatever new piece of jargon one can throw out. Algo, robo. I mean, who is this nonsense for? We're all thinking people. Spreadsheets have been around forever. I mean, seriously, you've been able to automate just about anything in an Excel spreadsheet for a long, long time. This is not new. Back to the earlier Twitter conversation. Momentum. Trend following. Not new. I guess what keeps me going, I'm just incredulous to the whole conversation. That there's this still under the radar understanding of, frankly, very few people. What is it? 1/4% of all investable assets are perhaps inside trend following strategies. Now, look, I know a lot of people right now are excited about the Trump rally, and damn straight. But everyone knows, everyone that's been around for longer than a few years, knows that rallies, knows that big trends always end up going the other direction at some point in time. The critical understanding, and this is where Larry's going, this is where David Harding's going, unless you have a strategy that can deal with that down period, not just take a 50 or a 77% drawdown of your capital via a passive index fund or a buy and hold strategy, not just go that direction, but to actually have an exit strategy that gets you the hell out and leaves you closer to whole, at least as close to whole as you can be. I guess I sort of love that most people are never going to get this. I guess that's what makes this fun. Being on the outside with good, strong information and just watching the rest of the world be swept up in a big propaganda blanket of who the hell knows what. Keep your eyes wide open. There are smart voices out there. But when you see that Twitter debate between whoever, and you see those 5 men on stage that are all Wall Street giants, you got to know how to decipher who is real and who is not real. That's the first step. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.